Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are looking at a report from Hercules Capital, and let me tell you, the drama surrounding their executive pay is juicier than your favorite reality show. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can chat business all day. So here's the scoop. Hercules Capital just had their annual meeting, and while they voted in board members and picked their accountants, things got a little spicy when it came to voting on how much the top dogs get paid. Plus, there was a proposal to potentially sell stock at a discount, and the stockholders seemingly didn't like it. Let's break it down. First off, this is an 8K report, which companies file to announce major events. In this case, it's recapping what happened at Hercules Capital's annual meeting that took place in June of 2025. The main point of the meeting was to vote on a few important things. They had to elect directors, give an advisory vote on executive compensation, decide whether to allow the company to sell shares below their net asset value, what we can also call NAV, and ratify the selection of their accounting firm. 3 directors, which we can call people on the board, needed to be re-elected. These were Scott Bluestein, Wade Liu, and Deanna Gira. A vote also needed to happen on whether the stockholders agreed with how much money the top executives were getting paid. And finally, they needed to decide if they should let the company sell shares for less than what they were really worth, which is what we could also call their NA per share. The last thing was to make sure everyone approved of choosing PricewaterhouseCoopers, which is aka PwC, as their official accountants for the year. So the results, the stockholders voted in Scott Bluestein, Wade Liu, and Deanna Gira as directors. They also gave an advisory nod, which means that they seemingly agreed with how much the executives were getting paid, though the investors seemingly didn't authorize the company to sell shares at a discounted price below its net asset value. And they did agree to keep PricewaterhouseCoopers as their accountants for the next year. Now let's get into the nitty-gritty numbers. Alright, let's dissect these voting results. First up, the election of directors. For Scott Bluestein, about 63.7 million votes were in favour, while roughly 1.1 million were against and about 1.3 million abstained. Almost 62.2 million shares didn't vote. For Wade Liu, around 61.9 million voted for him, while about 2.6 million abstaining, and like before, around 62.2 million non-votes. Lastly, Deanna Gira got approximately 53.2 million votes in favour, with a larger opposition of about 11.6 million votes against, around 1.3 million abstained, and 62.2 million votes in favour, with a larger opposition of about 11.6 million votes against, around 1.3 million abstained, and 62.2 million shares didn't vote again. Now, the advisory vote on executive compensation, the one you have been waiting for here, approximately 56.1 million voted in favour of the compensation packages for the top executives, while around 6.4 million voted against, and 3.7 million abstained. Again, almost 62.2 million shares didn't vote. Proposal 3, regarding the authorization to sell shares below AIM, which means its real value, tells an interesting story. About 52.6 million votes were in favour, with all stockholders taken into account, while roughly 11.1 million voted against and about 2.5 million abstained, with nearly 62.2 million shares not voting. But here is a twist. If we leave out the shares held by Hercules Capital's affiliates, the score is approximately 47 million voted in favour, with all stockholders taken into account, while roughly 11.1 million voted against and about 2.5 million abstained, with nearly 62.2 million shares not voting. But here is a twist. If we leave out the shares held by Hercules Capital's affiliates, the score is approximately 47 million shares not voting. The vote stayed at not authorizing the sale of shares below its net asset value or the real value. Lastly, the ratification of PricewaterhouseCoopers saw overwhelming support, with about 124.6 million votes in favor, roughly 1.8 million against, and approximately 2 million abstaining. No broker non-votes appeared here. So what does this all mean? Well, it seems like the stockholders are pretty happy with who's running the show, but they did not seem to approve of potentially selling shares at a discount. The vote on executive pay shows some dissent, so some people disagreed, but it passed, so it seems, but not by much. Alright, that's our breakdown of Hercules Capital's report. Hercules seems to be steered by a board the stockholders approve of, and that is always a +1. but the dissension on pay and the no on selling shares below NA is important to note. While the advisory vote on executive pay shows some dissent, it's non-binding, and the board can choose to ignore it while choosing to not sell shares below its net asset value is a move that will benefit the company in the future. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.